Welcome to the Real Estate Guys radio program. Thanks for tuning into the show today. We're going to make a big difference in your life and your real estate business as we show you how to create a quantum leap with real estate syndication. Today on the Real Estate Guys radio program.
Hi, this is Robert Kiyosaki, and I'm very excited about the next Real Estate Guys Summit at Sea cruise. And I've worked with Robert and Russell for I don't know how many years, 20-something years. Been friends all this time. We've always worked together. But coming up with something, and it's a concept called an infinite return. And once you understand an infinite return, it means you'll never need money. I'm going to have Tom Wheelwright, my accountant, because you have to have an accountant to do it. But it's probably one of the more sophisticated investment philosophies or strategies. It's something I've used since I've been 27 years old. And once you understand an infinite return, you'll never need money again. You don't have to pay taxes again. And you can never ever say again, I can't afford it. So I look forward to seeing you on the Real Estate Guys Infinite Return Cruise this March. Thank you.
Join Robert Kiyosaki, Tom Wheelwright, G. Edward Griffin, Peter Schiff, and the Real Estate Guys on the 17th Annual Investors Summit Infinite Return Cruise. For details, just send an email to infinitereturn@realestateguysradio.com. That's infinitereturn@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, co-host financial strategist Russell Gray.
Hey, Robert.
We are in beautiful Lake Las Vegas, Nevada, just having finished up the 2019 Goals Retreat, which explains my scratchy voice.
Yeah, no, it was a great event. You were fabulous, and everybody said they had a wonderful time. And, you know, the thing about the Create Your Future event, it's not really a real estate investing event. Or, you know, a lot of people think they want to learn how to invest in real estate. But really, before you think about how to invest in real estate, you have to think about why to invest in real estate. Any company goes out to work on their mission, vision, values, and when they think about why they're even in business. Well, if you think about that, you know, your life is kind of like a business. Certainly, your investing is a business. You spend a lot of your time working on making money, earning money, managing money, spending money, hopefully investing money, looking forward to growing wealth and having more money to manage and invest and all of that starts in your mind. And you kind of have to ask yourself, well, why? Why do I want to do this? Why does it matter? But once you get clear on that, and you think about not just what you want in your own life, but the difference you want to be in the world, most of us get to a point where we realize, you know what, I could do more with more resources.
Right.
Now it becomes, how can I go bigger, faster? How can I take what I have to go do more so I can have more, so I can contribute more? And so it's a lot about more. And more is okay if you have a good why. And so we've kind of covered that with the Create Your Future event. And if you haven't been to that, get on the list. And we're going to be rolling out the super early bird here before too long. And you'll be able to get the best pricing. But the thing is, put some time in at the beginning of the year. I mean, here we are in January. Put some time in and think about your life and what you really want to do for yourself, for the people you love, for the world. And you're probably going to realize you need to go bigger, faster in your income and in your investing. And that's what we're going to talk about today.
We say more sooner is better, right? Why wait to have more income, to have more free time, to have more lifestyle, to have more rich relationships? Why wait? Why put that stuff off? And most people invest in real estate part-time on the side. Most people are not full-time real estate investors. They get up every day, they go to work for somebody else. Hopefully they have a job they love, you know, and they have extra time to go out and do fun things. And then they think, well, I want to make sure that I'm set up for my future. And if I work and stay below my means, then I can take that extra money and I can maybe buy an investment property. So they buy a little house, and a couple years later they buy another house, and pretty soon they get the bug and they start buying multifamily, and they build up a nice portfolio. Lots of our listeners are like that. Lots of the people we've spent this weekend with are like that. They've got great ballast because they've taken time to think about it and been strategic. That may be you, or you may be someone who just fell into real estate. You ended up not being able to sell a house, and you bought the next one and kept it as a rental, and before you knew it, it made sense. And all of a sudden, okay, I get it. I get real estate makes sense. But there's only so far you can go in your own account. If it's up to the amount of money that you save and what you can qualify in terms of loans, you can get to a nice portfolio. But you can't get to a super portfolio. The way to do that, as we look around and as we've met listeners over these 20-some years, It's by syndicating, raising money to do bigger deals. And bigger deals give you all kinds of leverage and experience and opportunity that you're not going to get if you're just piling up houses in your account.
Well, I mean, the irony of it is it's actually easier to go bigger. And a lot of people don't understand that. They're intimidated by it. You know, back in the day when I was teaching in the California Association of Realtors, or GRI program, the real estate agents would come in and I'd ask them as we were teaching. I had them for all day. And in the beginning, I'd go around the room and where are you at in your career? Why are you here? You know, usually they're trying to expand their career. And a lot of them were brand new agents and they were looking to get some credibility. But many new agents go focus on new home buyers. They focus where they think it's going to be easy. And in fact, it's actually harder because everybody's competing there.
Yeah.
And you're dealing with people that typically are at the margin of their buying ability. And so they're harder buyers to get qualified to be able to, you know, get a home. And it's just a lot harder than they realize. And I used to say, you know, you guys could save yourself so much trouble if you got interested in investment in real estate, because now you're dealing with people who have better credit, more means.
And they buy more real estate more often.
And they buy more real estate more often. I mean, you know, it's we could go on and on. That's not the point of this conversation. But what I'm saying is that if you think about your life, you're moving incrementally. You're compounding. And compounding works because every compounding cycle, you know, you double. Or
right.
Whatever it is. And so if you have enough time and enough cycles, by the end, it's really growing fast. And so if you work early in your career, in your investing career, and you make incremental investments and you buy a house and one house turns into two and two turns into four turns into eight. That's what we call rapid investing. You're breeding equity, you're repositioning equity from property A to property B. And you do that for a few cycles. In a lifetime, you can accumulate a very nice portfolio. You can have millions and millions of dollars. However, it takes an entire lifetime. So a quantum leap is going from small to big fast. And the way you do it, the way you look at people like Sam Zell, Donald Trump, or some of the other lesser known names that have built these huge portfolios of real estate, a guy like Roger Staubach, they do it by raising money from private investors. That's the way it gets done. The beautiful thing is that it leverages your own personal time in life. Because if you think about it right now, if you're out there and you're working a day job and you're listening to the show because you're looking for ideas about how you can take your income and convert it into assets on your balance sheet and passive income so someday you can get out of the rat race, that's great. And then you're going to, you do your 40, 50, 60 hours a week at your day job. And then on your weekends and in the mornings or in the evenings or whatever, you're looking at properties, you're looking at deals, maybe you're dealing with tenants or you're working on your finances, whatever it is, that's over and above the time you're working. But what if you could combine the two activities? What if your job was investing and you invested your money right alongside your investor's money and you get a piece of your investor's profits because you've provided the service of doing the work because you're showing up to work every day. But now when you're done at the end of the workday, your life is yours. You don't have to go worry about investing. You already took care of it.
It's part of what you're doing.
It's part of what you're doing. So that right there. And then you think of all the things you have to do when you're managing a lot of real estate. Well, when you have a big budget, you can hire people. You know, if you're going to take a trip, like a due diligence trip, to go to a marketplace, to learn the market, to build a boots on the ground team, to create a deal flow, a pipeline, and you go out there and you say you have to take 10 trips at $1,000 each, you know, by the time you're all in with airfare, hotel, rental car, meals, whatever. First of all, you got to squeeze that around your full-time job.
Yep.
But forget the time component, just the dollar component. So you've got $10,000 load and you go buy a $100,000 house. That's a big load of due diligence on just a $100,000 house, or even on $1 million property. It's a bit of a load, right? It's like 1 point. So if you were doing, $10 million, now it's 1/10 of 1 point. It's almost imperceptible, right? So when you get economies of scale, the other thing is you can begin to hire people to help you with the bookkeeping, with the filing, with the following up, issuing reports, things you have to do with your investors. There's a lot of things that you can do when you have scale. So the point of that is you leverage both your time and your money simply by thinking bigger, because we talked at the top of the show, it starts in your mind. You have to start to think bigger. And then when you begin to think bigger, you will act bigger. And then when you act bigger, you will have the benefits of being bigger. And that's what we're after.
You mentioned leverage, and to get to a quantum leap, you'll have to have leverage. You can't just do it one step in front of the other. You have to figure out how to leverage. Yes, you're going to leverage your time and you're going to leverage your money, but you're also going to leverage what we call your experience resume, the book of business that you've done in the past, all the success and the failure you've had in real estate deals and transactions over the years in your own account becomes one of your greatest attributes as a syndicator, because you've been there, you've seen it, you've done it. So it's possible to start in real estate syndication with no experience. It's just really hard. You need to have something. You need to have some business acumen. You need to have been around the block. People want to know how to get started all the time. I don't think syndication is necessarily right if you're brand new, wet behind the ears. But I would say get acquainted with the concepts early so you have a path. At what point am I experienced enough to teach somebody else? Well, I need to get some basics down. Now, one of the big things about real estate syndication is that there are a lot more people who are so busy with their lives that they can't be bothered to go on those 10 trips or get the education. Then there are folks like you listening who are very interested in doing it. And so you provide a tremendous service. What you basically do as a syndicator is find real estate opportunities and package them in such a way that they become passive investments for people that have more money than they have time.
Well, that's all Wall Street does. All Wall Street does is create a marketplace so that people can invest in equities, the ownership of stocks. Sometimes they invest in debt, bonds, which you can do through real estate just by investing in mortgages instead of investing in property. So you can be on the debt or the equity side. You can be on the income or the capital growth side. You can pick up tax breaks. Pretty much everything that you can do with paper assets at Wall Street and a financial planner can do with paper assets, you can do with real estate. And I'll make the argument, and I'll take anybody on this at any time. You can do it better. You can do it better and safer. I'm not saying that real estate is without risk. Not saying that at all, but I'm just saying that there is a lot of reasons to like real estate. I'm guessing if you're listening to the show, you're probably already sold on that.
Yep.
So we're not going to spend a bunch of time on that. But I do think one thing, Robert, you brought up that I want to touch on is for the person who's out there, it's like thinking, okay, I kind of get it. I'm excited. I see the logic in this, the idea of being full-time and not doing my day job and combining my work and my investing and making more money and being able to be front in line with my own investments because I'm representing a bigger portfolio, so I have more marketplace clout. All the reasons why you'd want to do it. The question is who do I have to be? Who do I have to be able to do this? What do I have to work with? I do think that you have to have some investment skills, but you can hire people to do that. I think probably if I could just pick one skill that you had to have, and you can hire somebody to do this too, but if you had to pick the one skill, to me, it's the ability to sell. If you're a salesperson, if you're a person who can make deals, if you're used to leading and communicating with a team and inspiring them to follow your leadership and work your plan, if you're a manager, a small business owner, you probably have that one fundamental skill. Now, if you have that one fundamental skill, then the next thing you have to add to that is the ability to create business models where you look at a deal and you can see the gross profit this deal can produce. And then how do I slice that pie up in such a way that everybody who has to do the work gets paid at a level at which they're willing to do good quality work, and there's enough meat on the bone for me to share with my investors to where it attracts their capital and it attracts my attention. One of the things that you'll be amazed at is that as you get bigger, the slice you need is small.
Yeah.
Think about it. If you have $10 million, which is 10 $1 million investors, or 20 $500,000 investors, or whatever the math is, 40 $250,000 investors, whatever it is, this is not a huge business with millions of people. This is you having a personal relationship with a few of the right people who have capital that they need to grow, and you're bringing that service to them. But if you've got that $10 million and your total take on that is maybe 3%. That's $300,000. So that's not bad. $300,000 a year is not bad, managing a $10 million portfolio. So if you have investments that could earn, 15, 18, 20% annualized pretty predictably, and if you know how to do real estate, especially real estate with leverage, these are not grand slam home runs. These are the kind of deals that you can do over the long haul. I'm not saying you're going to do 20% the first year, but you don't have to return the capital the first year. Your investors are coming in and saying, hey, I'm going to do a 5-year deal. I'm going to build a portfolio for 5 years. At the end of the 5 years, we're going to refinance or we're going to sell the portfolio and we're going to go do other things where we can do value add or whatever the strategy is. But the point is, if you take 3 points off of that, you're 15 to 18, and give them 12 to 15, that's a very competitive offering.
Sure.
That's a very competitive offering, especially if you can marry that with some tax breaks and some stability. And I think right now, one of the gifts that Wall Street is giving Main Street is Wall Street is suffering from severe uncertainty and volatility right now. And you marry that to the tax breaks that have just been added in this last year, which is huge. And I don't think the hugeness of it has really, rolled out into the marketplace yet. And then you marry that to this opportunity zone thing where you've got an opportunity for people that have highly appreciated assets in Wall Street, people that bought Microsoft, Facebook, Apple a decade ago, 15 years ago, right? Whatever it was. And they're sitting on these huge capital gains. And if they sell, they're going to have to pay this huge tax. So they don't sell. They just leave it sitting there on their balance sheet. Maybe they borrow against it or whatever, but now they're nervous because it's like, wow, this thing's topped off. These things are going down. Do I sell? Do I not sell? The opportunity zone gives them the opportunity to sell and then roll the profit into real estate type projects in a variety of marketplaces. And so this is a huge opportunity for syndicators right now. I mean, we've been talking about syndication for 5 years to 6 years now.
Longer than that, right? 2011.
And we thought it was a great opportunity, then because the capital markets were broken, because there was so much blood in the streets or so many deals. Now there's all kinds of equity. There's equity in the streets, and you have to ask yourself, well, is it still good? Well, I would make the argument that right now it's better than it's ever been.
Well, it was great back in 2010, 11, 12, because there were bargains. And if you had cash, you could really pick up some great stuff. And the bigger deals sat longer because people didn't have as much cash. You go collect $50,000 from a bunch of people, $100,000 from a bunch of people, put together a pile of money, you could do well. We know lots of people that have. Right now, it's the other side. The market has appreciated such that people have equity. If they sell a property or they sell an appreciated asset of any kind, and they can have a lot of money to be working, and the opportunity zone thing, and if you're not familiar with that, go back a few months, you'll find our show on opportunity zones. It is a brand new situation that's been created by the new tax law, and there are opportunity zones, physical opportunity zones in every single state of the U.S. and Puerto Rico. So this is a U.S.-centric thing, but the mindset is the same anywhere you go in real estate, is that there are places where money can do good and create return, and you add to that a big tax benefit, like the deferral of paying tax or the elimination of paying tax, both of which are inside opportunity zones. Now it makes even more sense. So timing-wise, we've probably never been more excited about syndicating than we are today.
No, absolutely. Absolutely. And so the thing is, again, if you've got sales skills, if you have business skills, if you have project management skills, I mean, you don't necessarily have to be a top-notch real estate investor, but you're going to have to find one. And it's like building anything. You're like a head coach. And so you don't have to throw the ball, catch the ball, be the best tackler, but you've got to get great players on your team. Syndication gives you the scale to do that. You have to be a great organizer. You have to be somebody that can see the big picture, put the pieces of the puzzle together in a plan that makes good sense and feeds everybody who's got interest in the project and is contributing to it.
We're talking about how to make a quantum leap in your real estate investing business through this concept of real estate syndication. Lots more to share with you. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Memphis is famous for being the home of the king of rock and roll, but it's also the king of cash flow. If you're looking for affordable cash flow properties, it's hard to beat Memphis. Get your portfolio rocking and more cash flowing your way by calling Terry Kerr at Mid-South Home Buyers. Terry's the king of turnkey properties. Contact Terry through the resource section at realestateguysradio.com. And be sure to order Terry's tips for turnkey rental property investing report. It's free. Just send your request to turnkey@realestateguysradio.com.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hi, this is Tom Wheelwright, best-selling author of Tax-Free Wealth, and you're listening to Real Estate Guys Radio.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. There are still a few cabins left for the 2019 Investors Summit at Sea. It's our 17th year, an amazing event. It's 10 full days. It is crazy awesome. The faculty is amazing. And we've just learned that Robert Kiyosaki will not only be with us on the summit, unlike the last couple of years that he's been with us, this time he's staying the whole time.
All 9 days.
Yeah.
Nine opportunities to be at a dinner table or hanging out in the receptions that we do in the bars and talking. And he's bringing some of his team and bringing the CEO of his company. And they're going to be talking about infinite return. You know, Robert Kiyosaki has been talking about infinite return forever. He and his team, Kenny McElroy and Tom Wheelwright especially, have really worked on how to go about the business of creating infinite return. If you're not familiar with the concept, it's not rocket science, but talking about it on a radio program and then actually going into the real world and doing it are maybe two different things. But the idea with infinite return is you go into a property and you create some value. You know, maybe you buy an underperforming property, a fixer-upper, a rehab deal, whatever it is, and then you create some value, create some equity, and then you stabilize the income and you pull that income back out and you marry it with the tax breaks, and all of a sudden you have none of your own money in the deal, and the deal is still growing and the deal is still cash flowing. And so he's going to break down exactly how they do that, why they do that, and how all the pieces of the puzzle fit together. And again, the thing about Robert Kiyosaki is Robert is a lot less about information, although the information is important. He realizes that the information is out there. It's not the information. We're talking on this show today about quantum leaps, and it starts in your mind. It starts in understanding. The reason they're able to do those deals is Kenny's a syndicator.
Right.
That's how he and Robert met. Kenny was out there looking for wealthy people who had more money than time, that Kenny could take his expertise, and Robert Kiyosaki became one of his investors, one of many of his investors, and of course, probably his most notable investor and maybe one of his largest investors. But Kenny provided the service of growing Robert Kiyosaki's capital. Robert Kiyosaki had to become a guy who could understand the concepts, who could lead the team. You know, the first year we had Robert and Kim on the summit back in 2012, he brought his entire team. And every time they had spare moments, they were off, and Robert was leading this group and making plans and interviewing them and saying, okay, based on what we just learned, what are we going to do? How are we going to implement? When you come on the summit at sea, you get a chance to not only learn from Robert, but you get to put yourself in the very same environment that Robert himself puts himself in, working with teams of advisors and opportunities and other investors, getting a 360. And so in 10 days, you will get more done in terms of advancing your financial education and understanding, deepening your belief that, yes, it really can happen to you, meeting all of the right people who can help you. And most of the people who are there, nobody has anything really to sell. Sure, there's people there that, we have that are providers, but, this isn't like an expo where there's booths and people are passing out brochures. There's no soliciting on the summit. It's an educational experience, but it's also a networking experience. If you're going to go big, you're going to have a team. You're going to have people, friends that you can talk to that are kind of peers to your mastermind group, if you will. And you think about how much time and money it would take for you to meet those people, to build relationships with those people, to get to know them well enough to decide if you felt like it was compatible for you to do anything together, even if it's just coach each other up, much less invest with each other. Think about how much time and money you would have to spend to do that. So the idea of compressing time frames, people look at the cost of the summit like, oh my gosh, the summit, costs thousands of dollars. Well, compared to what?
Right.
I mean, compared to what? Compared to spending 10 years going to networking groups, on the cheap, so that 10 years from now, maybe you've assembled a group of people that are at a level where they're all there because they're not willing to spend a few $1,000s to be in a room with people that are willing to spend a few $1,000s.
That's a big point right there. I mean, the people that show up are all the people who are serious enough to invest and be in this amazing event for all this time. It is hard to have 10 days and a big chunk of money to do something like this. But because it is, all the people that are there are amazing. In fact, lots of them are very successful real estate syndicators. You'll get to meet those folks, hang out with them. Anyway, we could go on, and often do. But if you want all the details, go to the website at realestateguysradio.com and click the button that says Summit at Sea and join us for the 17th Annual Investor Summit. We're talking today about making a quantum leap in your real estate investing and really viewing it as a business. And the business of syndication is still doing real estate deals. It's just you're doing them bigger, you're doing them better, you're doing them more professional. Because back to your comment, which is great, about on the cheap, when you're raising capital to do a substantial deal, you're not bringing in the C team that's the low price leader. You're bringing in competent, quality team members when it comes to financing, when it comes to inspections, development, construction, anything that's involved in your actual deal. You don't have to go on the cheap. You have to get the right person that can return the money. A good friend of ours has always taught us that when you hire the best, it doesn't cost you money. It makes you money. And that's one of the great benefits of syndication. Not only you're going bigger faster, you're going bigger better.
Well, let me give you a practical example. If anybody out there has ever gone and contacted a inexpensive attorney, a budget attorney, and there may be $150, $200 an hour, and they purport to be experts in a specific area of practice. And so you go and you ask them a question, and then you get an invoice, and they spent an hour to get you the answer to the question.
They call it research. Let me research that.
So you paid $200 or whatever it is for the answer to that question. You go ask somebody that is at the top of their game, that eats, drinks, breathes, lives in this particular niche and has lots of experience, maybe part of a firm where there's a number of people where they can just quickly pick up the phone and get the answer. You might get a bill for 15 minutes.
Right.
Okay, well, yeah, so he is a $400 an hour attorney, but 15 minutes, a quarter hour of $400 is cheaper than 1 hour of $200.
Yep.
And plus, what about the time you wasted? And what is the quality of the answer? So I'm not, putting down inexpensive attorneys if you figured out a way in a business model to be able to be effective at that level. But the point about this quantum leap, and again, going back to what we said at the top of the show, is it starts in your mind. It starts how you think. If you think cheap, if you think small, if you think about, oh, that's expensive. If you think about investments in your education and your networking as spending money, then you're thinking about it all wrong. These are investments. It's like the same thing, going back to those early days with those real estate agents. A lot of them would have money that they had built up to save so that they could go full-time in real estate. Their dream was to be a successful real estate agent. And so they cashed out their 401k from work, or they got an equity loan, or they sold a big house and moved into a smaller house. And they got $40,000 or $50,000 set aside to live on while they build up their real estate career. Rather than invest that in advertising and training, they try to do everything on the cheap, so they don't have skills, they don't have a pipeline, they don't make sales, and they draw down on that $40,000 or $50,000 that they've saved and didn't invest, and then they go broke. And what I used to tell them, I said, look, I understand that because I had employee mentality. I thought exactly the same way. And what I learned is money isn't something to be hoarded. It is a resource to be used. And you have to figure out how to make smart investments of your time and your money so that when the money goes out, it comes back with more. And that's the point of it. That's what being a business person is all about. And so a lot of people listening that already got that figured out, right? But we're kind of talking to those of you that are like kind of on the fence. You're like trying to figure out, you're listening to the show because you're looking for the answer. And you think maybe it's going to be a magic formula, or we're going to give you the top 10 markets, or we're going to teach you the secret financial strategy. All those things are important, but they don't mean anything until you think bigger.
It's one of the big benefits of real estate syndication is you're no longer limited by one, your thinking, or two, your personal wealth. You look at an amazing deal comes across your desk, and instead of saying, wow, I can't afford this, you say, how can I afford this? I can get together, 5 buddies who have money. Syndication doesn't have to be multi-million-dollar deals. So when we get back, we're going to talk about how you get started in syndication, and it can be quite modest, and it can lead to amazing results. We'll also play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Are you looking to create sustainable wealth through agricultural real estate? Then look no further than Agro Nosotros. They're a sustainable specialty agriculture company with specialty coffee farming operations in Panama and fine flavor organic chocolate operations in Belize. Over the last 4 years, they've helped ordinary people to diversify outside of traditional real estate and into offshore agricultural real estate. They don't have your typical tenants, termites, and troubles. Their tenants are trees, and they grow and produce 2 hugely popular and proven products, coffee and chocolate. Through Agro Nosotros, you can own half-acre parcels in your very own specialty coffee or organic cacao farm, turnkey managed on your behalf, that produce passive cash flow for you and your heirs. And you can feel good about where you put your money to work. Agro Nosotros has socially sustainable programs that provide living wages, improved accommodations, and a steady channel to market to literally hundreds of farmers. And so far, they've placed 61 kids in school. To find out more and see how you can get involved, email agro@realestateguysradio.com. That's agro, A-G-R-O, @realestateguysradio.com.
Hi, this is Sam Freshman, author of Principles of Real Estate Syndication, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show today. We're talking about how you can make a quantum leap in your real estate investing business through real estate syndication, raising money to do bigger deals. Before we get back to that discussion, it's time to play real estate trivia. That's your chance to win a prize. It's a good one and one we've never given away. As soon as you hear the question today, which of course has something to do with real estate, then get your answer to us by sending an email to trivia@realestateguysradio.com. Trivia@realestateguysradio.com with the answer to the question and your mailing address. Because if you're the winner, we're going to send you this book that has just come out. It's called Resilience, Turning Your Setback into a Comeback. It's got all these amazing stories from folks that have been through the muck and lived to tell about it. You're going to dig this book, Resilience. What a great quality to have. That could be yours if you're the first person with the right answer to real estate trivia. Last week on the show, it was our predictions panel for 2019, and we asked this: name the only U.S. state capital city without a McDonald's restaurant. Well, the answer is Montpelier, Vermont. It's also, by the way, that is the smallest state capital in the United States by population, with a population under 10,000. And I'm not even sure if I pronounced it correctly because I've never been there, because there's no McDonald's. So yeah, well, there you go. There's our city, capital city without a McDonald's. Here's our real estate trivia question for this week. In which country will you find a village named Beer? Beer, that's the name of the village. You walk in and they go, welcome to Beer.
Also, is that where the village idiot lives?
I don't know. I think that's a pretty smart village person to live there. So it's a place called Beer. I haven't been there yet either, but I want to go. They had me at Beer. So our question is, in which country is the village named Beer? Well, you will find a city that's called Beer. If you know or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address. If you're the first one with the right answer, you're going to get this great book, Resilience, Turning Your Setback into a Comeback. That's today's real estate trivia question. We're talking about how you can make a quantum leap in your real estate investing business, and we would submit for your consideration the idea of raising money to do bigger deals, what we call syndication. And there's particular deals that are good to syndicate. And I think we want to dispel one of the myths about real estate syndication is you don't have to be a multimillionaire to do it. You don't have to do giant, shopping center, hotel deals. You can start pretty small. And as long as you have a drive and determination and are willing to get educated, you'll be able to do this. It is doable. In fact, Jim Rohn would call it easy. because he said the definition of easy is something you can do. But it does take some work.
Yeah. It reminds me of the story of Josh and Lisa Lannon. They're Robert Kiyosaki's social capital advisors. And we've had them on the Summit at Sea more than a few times, and we've become good friends. And Josh and Lisa's story is really remarkable. And we're not talking out of school, okay, because Josh tells his story publicly. It's pretty well known.
It's a whole reason they wrote their book was to make people understand the story you're about to tell.
Yeah. So Josh was a raging alcoholic, working in Las Vegas with a 10th grade education, working in his dad's bar. And he and his wife, Lisa, were there. And Lisa one day came to him and said, Josh, you know what? If this doesn't stop, this is an intervention. I'm leaving you. And so Josh went into rehab and he got rehabbed, which was great. And so he came out of that and he's like, well, I can't go back to what I was doing. And so now I'm this new person. So that's a paradigm shift. That's a quantum leap. It's a change in the way you think. It's a change in the way you see yourself. And they listened on the drive back home from the rehab. They listened to Choose to Be Rich by Robert Kiyosaki. And Robert Kiyosaki is a master at putting personal transformation messaging into a financial education component.
Yeah.
Anyway, so that's a little bit of the background. So what Josh did was he took the things that he learned from Robert Kiyosaki and Rich Dad, and he went out and he actually did them. What a concept. And he raised money. So this is what he did. He said, look, I just went through this rehab experience. I see the value in it. I want to be a difference in the world based on what the world has just done for me. They've saved me. And so he created Journey Healing Centers. And so Josh went out and raised money. So here, think about this. Here's Josh with no experience other than having gone through a rehab center, no education other than 10th grade. He had just a desire to make a difference in the world, and somebody told him that he could do it, that he could think bigger. And he went out and he raised the money. And I remember when they were raising the money. And anyway, so now Josh built this multi-million-dollar company, and he's got doctors, people with PhDs and MDs, these highly educated, highly successful people. He's paying them six-figure incomes, and they work for him. That's what syndication is. That's what syndication does. Ultimately, Josh and Lisa sold Journey Healing Center. They sold the rehab centers and kept the real estate, and then had a stream of real estate. So it's just an example of what can happen. And so, wherever you're at, I'm guessing if you're listening to this show, you're probably not as far down as Josh was at the time that they made this conversion, if you will. But wherever you're at, if you're aspiring higher, if you are thinking, hey, this is the beginning of a brand new year, it's the end of the second decade of the 21st century. Now, we're now going to be going into the 2020s as soon as this year is over, heading towards 2030. It's like, what do I want that decade to be all about? This year, 2019, could be the year that you make the shift, that you get around a new set of people, that you adopt a new way of thinking, that you take the skills and the resources that you have in your life and you learn how not just to ratchet up incrementally, but how to take a quantum leap, become a completely new person in a completely new business, and go someplace that you would have never even imagined you could possibly do, because we have people all around us doing it. We had a guy that joined us 5 years ago. It came to a syndication event, heard us on the radio, and then he went to the seminar and he got involved in learning how to do the business. And pretty soon, 5 years later, he's raised $100 million. I'm pretty sure when he started, he didn't even think he could do that, right? But he did it. I'm pretty sure when Josh and Lisa started out, they were just trying to figure out a way to make a living doing something they felt passionate about. But they woke up one day and they're multimillionaires because of it. And they made a difference in the world.
Absolutely. The gentleman that Russ is referring to, his name is David Zook, and he will be at our upcoming Secrets of Successful Syndication as one of our primary speakers to share exactly what he's done. And I think one of the things we need to make sure people understand is how you get paid in syndication.
Yeah.
Because there's a ton of money. So you gave the example before that if your take, if you will, was 3%. Okay, now imagine you've raised $100 million. That's a pretty good number.
That's a good number.
A lot of syndicators make more than 3%. A lot. So how do you get paid in syndication? Well, there's lots of ways. We'll discuss this at the event for sure, but most syndicators are going to be on the line with the deal. They're going to make money when the investors make money. So say our plan is to go out and buy a beautiful property. We're going to maybe rehab it. We're going to make some changes in management. We're going to get the income up, and then it's going to create revenue. And we split that revenue on some degree. Maybe 80% goes to the investors who put up the capital. Maybe 20% goes to the promoter or syndicator that put the deal together. Maybe it's 90-10. Maybe it's 50-50. Totally depends on the deal. But you're going to be on the come, if you will. You're going to bet with the deal, and you're going to get paid when your investors do. But along the way, there's also other ways to get paid. There's sometimes what we call a promote, a fee up front to help the syndicator be able to give the attention to the deal. It's not how a syndicator gets rich, but it's how a syndicator can have income while they're working on behalf of their investors. There's other fees. You can put a fee in on reversion when you sell a property, on acquisition when you buy a property, on financing when you go to the trouble to finance, because these are all places that you, as the chief commander of the deal, are going to be doing work. And so it is a very lucrative business as well as a great business that can help people find investments they could not find on their own and make a difference, like the example you gave with Josh and Lisa.
Yeah, well, think about this for a minute, because sometimes people have a hard time getting their mind around it. Syndication is kind of like borrowing. So if you know how to make a down payment with your own money and then go get a loan and then turn around and make a profit on the money that the bank gave you, you're doing the same thing. The only difference is when you give the bank their money back, you just give them whatever interest and all the upside is yours. When you raise equity, you're sharing that upside. So equity is actually more expensive, but it's also more readily available. And then you marry that to debt. And so instead of you bringing the down payment in, your investors are bringing the down payment in. You may still go out and get debt. And so it works exactly the same. The difference is you and your partners now, because that's what your investors are sharing the profits that you create in the deal. So as far as you getting paid, think about this. If you were to go buy, say, a rental property or a group of rental properties just in your own account, and you were to do the property management to save the 8% that you would have to pay a professional property management, you're effectively paying yourself to be the property manager. Okay, so what you're saying is there's work to be done to manage this property. Well, there's work to be done to manage a syndication. So you may not be the property manager collecting the rents, but you are the fund manager. You are in charge of picking the property manager, finding the property, arranging the financing, raising the money, working with the lawyers, making sure that the accountants are doing what they're supposed to be doing. That's your job. And so when you raise money to invest in a syndication, you are literally creating a job for yourself. And you get paid out of the deal for doing that work. If you do it well, you can eventually build it so that everything is paid for, everybody else is doing the work, and you're stepping out of working in it, and you're only just being on the profit sharing side and maybe getting a small oversight fee for looking over the team. So you can structure it any way you want. That's the point. It goes back to this idea of you don't have to be great at all of the things that have to be done. You have to be great at knowing what needs to be done and then getting people on board and holding them accountable to get it done. Don't get too confused about how you make money. There's plenty of money to be made if the deal is good. If the deal's no good, you shouldn't be doing it in your own account or anybody else's. But if the deal is good, there's plenty of money to share. And again, the expectation of return on capital for people who aren't actually doing the work isn't as high. So there's enough meat on the bone. Again, just a few points makes a big difference in a big pie. So the hardest part in anything is just getting started. It's like, well, how do I go from where I am, to where I want to go?
That's what we're going to talk about next. Is syndication the way for you to make a quantum leap in your real estate investing career? Stay with us. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
If you want to learn how you could potentially increase your net worth by over $1 million and quit your job in just a few short years, listen closely for the next 60 seconds. This is Brad Sumrock, and over the past 16 years, I've helped thousands of people invest profitably in real estate, but not just any type of real estate. I specialize in helping people syndicate large apartment buildings so that they can be business owners and investors. In today's competitive environment, it's even more important than ever to leverage an experienced mentor, invest in your education, and have a team of advisors that has established relationships nationwide. And so many people right now seem to be struggling to find deals and then get them funded, but yet Sumrock students are thriving in today's marketplace. We've purchased nearly 7,000 units and nearly $1.5 billion in purchase volume over the past 12 months. And with the new Trump tax laws, apartment investors are positioned now better than ever before to pay even less in taxes. To find out more, send an email to apartmentsnow@realestateguysradio.com and you'll get my recent presentation called Why Apartments Now. That's apartmentsnow@realestateguysradio.com.
Hey, it's Kyle Wilson, Jim Rohn's 18-year business partner, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you want to do bigger deals using other people's money and syndication sounds like something you're interested in, then come on out to the Secrets of Successful Syndication. This is a 2-day workshop that we do twice a year, and we've got one coming up the middle of February, right around the corner. And you can get all the details on our website at realestateguysradio.com under events. We've been talking about this idea of making a quantum leap, and syndication does that, but how do you get started in syndication? Well, there's lots of ways, and I mentioned earlier, it doesn't have to be grand, it can be modest. One of the stories we'll share with you, a case study, if you will, at syndication was a guy who was really interested and had a lot of drive and desire, but had very little money. In fact, the market he selected was a market he would take the bus to, and he would stay at the cheapest hotel he could find because he was definitely on the cheap, but he got inspired. He worked in an environment where there were wealthy people who were too busy to be bothered, but they were interested in this young kid, and he basically got 4 investors to each put $30,000 in, and his entire equity raise was $120,000. That syndication returned a double-digit return to all the investors, including him, on their money. So that's a simple syndication. Now today, guys like Dave Zook and people in our world are doing deals where the equity raise is $4 million or $10 million or $27 million. And you're going to meet some of those folks at the syndication event, but you're also going to meet folks that have just done a deal or two, just getting started. And the way you get started is you put your mind to it, you get educated, and then you take a few simple steps.
Yeah, I mean, if you think about most of the things that you've learned in life, that you've really learned in life, somebody showed you. They didn't tell you. I mean, I'm not going to sit here and describe to you how to ride a bike. I'm not going to explain to you, how to speak your language. You're just going to hang around and you're going to learn it. So I think the first thing is you listen to shows like this. You put yourself in an environment where you get around people that are actually doing it, and you get into conversations. You start to glean how they think, what they do. Again, if you go back and listen to Choose to Be Rich by Robert Kiyosaki, it is not loaded with a bunch of how-to technical stuff.
Right.
It's really about changing your mindset and learning how to keep it super, super simple. And that is learn the basics and get around the right people, the right advisors, and then just be diligent to be on top of the things that matter most. And most of the rest of the stuff can be handled by other people. And so it really starts with that. So that we do this event because we saw the opportunity way back in 2008, 2007, coming in through the crisis. We thought, oh, this is going to be a huge opportunity in private capital. And we had experience doing that. We've had success doing that. So we said, well, okay, let's teach people what we know. And if we could show somebody how to do something in a couple years that took us 10 years to learn, and bypass a lot of the painful mistakes we made, then we're adding value to the world. It allows us to put ourselves in an environment where we get around the right people. And if we get a big enough crowd, we can invite some extraordinary people to be a part of it. And that's happened. Kenny McElroy has come out and spoken at this event. George Ross has come out and spoken at this event. Robert Kiyosaki's come out and spoken at this event. So we've had a lot of great people. We even had a rock star, right?
Literally a rock star, the guitarist for Def Leppard for the last 35 years. Phil Collin came to our event and shared some great success ideas and mindset and played a few songs. So you never know who's going to show up at the Secrets of Successful Syndication. This time we've got several speakers because there's lots to cover. It's not just Russ and I. Russ and I do a small part of this event, but there's a lot that goes into finding deals, sourcing deals. The legal side is huge.
Yeah.
This is a legal business. You've got to understand the paperwork and your fiduciary relationships and all that. There's a lot to learn, but the great news is it's learnable and you can do it in bite-sized chunks.
Yeah, and I think to me, what we've done is try to keep it real world. So after 5 years of doing this, we have lots and lots and lots of real world people that are all at various stages. But Dave, the superstar, Dave started sitting in the seat at the seminar.
Yep.
He heard us on the show, just like you're listening to us right now, made a decision to come. He came to the event, and then he learned, and then he came back, and then he went out and he started to do. We opened up a mentoring program, and he took advantage of that and became part of that. And there was a point about 3 years ago where he was ready to quit.
Right.
So we're not saying it's all sunshine and unicorns. It gets hard sometimes, and you second guess yourself. You're like, do I really want to do this? Am I really cut out to do this? But to his credit, Dave stayed the course, and he pushed through, and he grew, because the hard times is when you grow the most. And he grew. He became a better presenter. He became a better teacher. He became a better manager. He became just better all the way around. And he came to realize that it's the people he surrounds himself with that makes all the difference. And so, he hit us up just a few weeks ago, and he said, hey, guys, I just wanted you to know this milestone that we've been kind of tracking, I just hit it. And so Dave is, our first $100 million man. I hope that he's not the last. I don't expect him to be, and I think he's going to continue to grow. He could be our first $1 billion man. I don't know. But the point is, he's our Roger Bannister. He's the guy that has proven to everybody who's out there struggling that it can be done. And so if you need that kind of inspiration, in addition to the actual instruction and a network of people that you can plug into, a community of subject matter experts, service providers, and peers who are doing what you want to be doing, I can't think of a better investment to leverage time and money than to come spend a couple of days in Dallas, Texas with us and meet these people and hear what they have to say. And you know what? If you're thinking about it and you're dreaming about it and you're wondering if it's right for you, just find out. Come find out. And if you decide you don't like it, then you can get busy going finding out whatever the thing it is that's for you. But I'm pretty sure if you've made it this far through the show that you're probably that person out there that is ready to go. And if there's something in your head that is telling you that you're not ready, you don't know that. Just come find out.
And there's already more than 150 people who will be there, so we're not here to sell seminar tickets. We're here because we're excited about this event and the transformation that we see it have in people's life. This weekend at the Goals Retreat, over a dozen of the people here we sat with to talk about syndication goals, and it's amazing how much change in the world will happen because these entrepreneurs will take the ball, do the work, raise private capital, go do good real estate deals in a fair and ethical manner, make lots of money for their investors, and make lots of money for themselves. If that sounds like something you want to do, come on out. The Secrets of Successful Syndication happens in the middle of February. And an easy way to get all the details is just send an email to syndication@realestateguysradio.com. No matter where you are in your real estate business, look for ways to shorten time frames, ways to get more done, and ways that real estate can help create the lifestyle that you want to live. Syndication may be for you, and if not, well, that's all right too. So many different ways to invest in real estate. This time of year, one of the things people are thinking about is their taxes. Next week, we're going to talk tax and real estate, and we've got an amazing guest. Certified public accountant Tom Wheelwright will be with us. Until then, go out and make some equity happen.
This is Robert Kiyosaki, and I'm very excited that I'll be joining the real estate guys for their Investor Real Estate Summit at Sea. Join me, join my friends, join the real estate guys, Investor Summit at Sea, and I'll see you out there. Thank you very much.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.